Where are the big opportunities for you and your money in a market that has had a heck of a run already? Joining us now is Joel Shulman, founder and CIO of ERShares. They've got some of the best performing ETFs out there. Joel, great to see you again.
Good seeing you. Thank you.
I mean, listen, you called it, man. Back in December, when everybody was, I mean, literally hiding under the table, sucking their thumbs, crying, you were slow and steady. You said reinvest. You've done well.
We launched a new IPO. We did a non-U.S. small cap IPO for that very reason. And our U.S. mid caps have been up 45%, and our U.S. large caps are over
45% in what time period?
Since Christmas.
Your,
Christmas.
Your mid cap ETF is up 40%.
Well, no, not the ETF. We have an SMA. Our U.S. large cap ETF is up 38%.
38%.
Yeah.
Since that December 26th bottom in the mid cap. Index, investment fund.
Well, that's a large cap. That's a large cap.
45% gain, simply incredible.
Yeah, well, the large cap was 38. The mid cap was an SMA.
38 and 40, amazing.
Yeah, thanks.
This is a non-U.S. small cap, but do you see opportunities in U.S. small caps?
U.S. small caps, yeah. In fact, we're in the process of launching a U.S. small value fund. For that very reason, because they've been beat up. In fact, in the last month, they've been up 6.5% the last 30 days. And so small value is strong, small growth is strong. It's one of the few areas left in the U.S. that's not yet caught up to the 2018 highs.
That's why I brought it up. I do wonder, is small value an oxymoron? I mean, how do you define small value?
Well, I mean, these are
jumbo shrimp or something, you know?
You're absolutely right. I mean, these are companies that have been beat up. I mean, they still, I mean, we like to, within small value, I mean, there's two groups. I mean, certainly there's a group that kind of the falling knife that's coming down like Sears when they're large cap and then small cap. You know, at some point they become small value and then they disappear. And then we look for the smaller companies that are actually, appreciating, nanos, mid caps, and so forth, that haven't had the big jumps like some of these IPOs you're talking about now, like Lyft and so forth.
I guess when I look at 38 or 45 or whatever percent gains in 4 months, Joel, in 4 months, I understand we had this December tanking. It's hard not to ask. How much more realistically do we see for the rest of the year? I mean, I'm not trying to be pessimistic here, but it's unbelievable.
We're asking the same thing. I mean, these are the questions people were asking back in September. How much more? So I think things are nicely valued. I love the idea that on any given day you can have an Amazon which goes up and a 3M or a 2M. I didn't hear the 2M, but I like that.
It'd be better if it was 4M, not 2M.
Yeah, but no, you're right. But on any given day, we have stocks going up and stocks going down. So Intel's going down, Amazon might be going up here today, and I like that. I think that's a healthy market. Whereas back in the fall, in December, the fourth quarter, everything's going down, and the third quarter. So do you like, if I'm hearing you right, you like the fact that stocks are actually moving down on bad news and moving up on good news? Everything is not a bunch of lemmings running off the cliff or going up. I love it. I think that's a sign of a healthy market. I mean, volatility.
People are paying attention to individual stocks, actually doing their homework, looking at the numbers, understanding their business.
That's it. That's it. I mean, I think for
novel concept
in investments, I mean, this is what we want. We want good stock analysts, good pickers, your audience and so forth, knowing companies to pick and going after them. And I think that's the way to do it. All right. So I love these markets.
Do you love the U.S. markets over Europe with the non-U.S. small cap? I mean, listen, what you want to do is buy low.
Right.
I'm told.
Where do you sell? So we have a non-U.S. small cap that's global, and so we think that within our funds, we obviously we like all our funds, but we think our best product right now is non-U.S. small cap, and from that standpoint, right now that's perceived as value. I mean, there's growth-oriented stocks, but it's perceived as value because last year this market got beat up.
Yeah, looking at small caps around the world, but incredible returns off the 4 months, 38 and 45%. Joel Shulman, thank you.
Thank you.
Great to see you. We'll see you soon.